The success of our society proves that our system works, but maybe we forgot to teach our young folks that wealth is achieved by helping people to get what they want. So, if no one has yet taught you how the game is played in the big leagues, well, guess what? Now, it's your turn. There's a billionaire locked inside you. The key to freedom is information. The kind of information you find here on the Money Man Report. Now, here's today's host. Here's the Money Man. Here's Dan Frishberg.
Well, good morning, everybody. This is the Money Man Report. Thanks very much for joining me. I am Dan Frishberg, and the format today is going to be a little bit different because I'm so happy that I have my good friend Tobin Smith on as a guest. And so through the magic of our space age technology, you're going to be able to see both of us. Now, I first met Tobin Smith maybe 25 years ago when he was the smartest guy on the Neil Cavuto show and all over Fox at that time. And actually, I think the reason I got my teeth fixed was because Toby told Alicia, take a look at what he looks like on television. and so that was about 30 grand worth of time.
I was going to say that. Don't hold it against me, pal.
No, that was great. Worked out fine. It was terrific. And I think the guy did it for in return for commercials. So it was really good. Anyway, yes. So anyway, I want you to, many of us haven't seen Tobin Smith for a long time, but if you've been following him, everything he does is about change. His original book that was a tremendous hit, and his service was Change Wave, which was one of the best things I've ever subscribed to. And that was 25 years ago or so, wasn't it?
22. I mean, the book came out in June of 2000. And we started I was the senior vice president of Phillips Publishing, and I was publishing other people's newsletters.
Yes, I remember that. Yes.
That I circulated to friends and family was doing like 3 times better than the ones I was publishing. And the president came over to me one day and said, you know, Toby, I have invested in some stuff with all the editors that I've been publishing for the last 25 years. And I made more money in the last year and a half with yours than anything else. So you're going to become an editor and I'm going to find another publisher. And that's basically how I got started. But I came back from a Wall Street background and got involved in publishing and media in the early 90s, got recruited back to Phillips, started Change Wave. And because I had the book out, shockingly, I was on the book tour, and right after I had interviewed with my all-time favorite woman, Liz Clayman, over at CNBC, the next hour, I went over to do Neil Cavuto show, the 4 o'clock show. And I won't bore you with all the story, but let's just say there was a very famous gentleman who was the president of Apple for a while, John Scully, in the office, and or in the green room, actually. And this was the day that Microsoft got hit with the, this is when they get hit with their monopoly suit. And John asked me about it, and I gave him what I thought was a decent answer. So blah, blah, blah. John Scully goes out there, and lo and behold, when Neil asked him, hey, what do you think of this monopoly thing with Microsoft? He gives him my exact answer, Dan. I did the stupidest thing you never do. You never give away the gold in the green room.
That's right.
But because of that, he asked me the question, and I went, and I part of the way I said is that these closed source software companies are ultimately going to be dinosaurs, and that's what John Scully said. So I said, look, it's not that Microsoft has done anything wrong here, except they've actually been buying up all the competitors, which that is being a monopolist. At that time, Checkpoint Systems, the people who invented the firewall, they had about a 94% penetration because they had the only firewall that worked in this brand new thing called the internet, and they weren't a monopoly. They didn't go out and buy people. So blah blah blah. Jim Cramer the week before got fired because he said something stupid on the show they did called the street.com. They needed somebody new. Neil invited me on to his Saturday morning show. Actually, I invited myself. I know it's a shock to you, Dan. And, the rest is history, basically.
You know how you got to, I don't know if you remember how you got to have a show on Biz Radio, which was
I do remember it was you guys.
Yes, but you may not remember, but Alicia flew out to the golf course out there in
Pebble Beach.
Flew out to Pebble Beach because she was calling you every day to try to get you to go on the internet, go on the radio with us. And you were so busy doing all the television and all the stuff that you were doing, you didn't really have time for radio. And finally, Marjorie called Alicia, who was calling you every day, and told Alicia he's at Pebble Beach. You can catch him right now. And you walked into the clubhouse, and there was Alicia. And you finally said, "Okay, I'll do it."
Well, she is a stubborn person, and that's a good thing. And I enjoy doing I enjoy doing radio. I must admit, the last radio show that I was on a lot was Steve Bannon's radio show, for God's sake, before he went nuts. And I was the business guy, and I'd have him on when I do it in his studio so I could look in his eye, and he wasn't frothing at the mouth, and his eyes weren't rolling back in his head. So I didn't know he was going to become the Steve Bannon, but hey, stuff happens.
So always, and we had about $1 billion under management, and I got a lot of ideas. You made me a hero several times because you manage change better than anybody I've ever seen. And change is where the opportunity to make money really is. It is actually confounds almost everybody, and they don't know how to do it, and it loses them money. But for the few people that are in touch with it and understand it, it is a fabulous opportunity. And so first you had ChangeWave, and now Transformity, which is just another synonym for ChangeWave.
Right.
Explain what Transformity research is to the people who are not up to date on where you are.
Well, I appreciate it. So at ChangeWave, my very simple approach to investment strategy is, the term of S curve, right? Something sort of like, let's say anything that's brand new. Let's say satellite radio was one of the big hits we had back in the day. And satellite radio started, and the growth of it was sort of flat. And then they got Howard Stern, and boom, the curve went straight up, adoption curve, sales, revenues, subscribers, etc.
Well, yeah, because something new, just let me interrupt, because when they're doing something new, it's a very low margin, high expense deal, and you have a lot of competition. And so that's the flat bottom part of the S curve. Most people think investing is about finding new ideas. It's exactly not that. It's really after they get to the next stage, when they win at the bottom of the S, that's when they're good. And that's what you're so brilliant at.
Well, the inflection point, it's funny, it's a physics term, and I think I got about a C- in physics, but I have a very limited skill set. And the one thing I can tell you is that you're absolutely correct. There's two mistakes people make in it. I don't even call it growth investing or value investing, but it's growth. Is that when you reach that point where you've gone from, you use the mental picture of a lily pad, and you don't see any of them flowers for a long time, and all of a sudden, boom, now you got a bunch of flowers popping out of those lilies. That's the inflection point. That's when you want to own a company like Checkpoint Systems, which was one of our first stocks, or one of our other first stocks was MicroStrategy, for crying out loud. And then you ride it, and I use it to ChangeWave. You ride that wave, but once that growth rate starts to slow down, the top of the S curve, starts flattening out. You want to be out, because what's happened almost all the time is people have fallen in love with this rapid growth, and they're willing to pay, serious multiples, because they're extrapolating that S curve as if it never flattens out. So they're willing to pay, let's say, 40 times earnings or 50 or 100 times sale, whatever craziness is, because there's assuming that the future cash flows are going to be so high that it's worth buying it now. Well, they're not, Dan. I mean, you know that better than anybody. Once you start to flatten out, baby, you jump off that wave. I was a surfer.
We call it the saturate. Yeah, we call it the saturation point,
Absolutely.
which is why that's why we don't invest in mayonnaise. It's a terrific product. Everybody likes it, but we all have it already. You don't need it. And that's not where the profit is. Tobin's so brilliant at getting the vertical part before it gets saturated. And that's really what you do now. So let's explain what Rexit is quickly. The idea of Rexit is a new name you've got for, I guess, based on Brexit, but go ahead.
Yeah, well, one day I was doing some television, and I was, this is just before the invasion, and I'll tell two stories. One is, one of the ways I was able to capture the S-curves as they start to, break above the water, if you will, and start to roll, is that I had built a very large network of subject matter experts, and we called at that point the ChangeWave network, which now, by the way, ChangeWave Network is owned by a Standard & Poor's Global. But a lot of those people stayed with me. And so, for instance, I got a text from one of my members who happens to be also in the CIA station in Hawaii, who follows China, and says, Toby, let me tell you, first off, you guys were right on the pandemic. And I also had two other people who worked for Micron and said, we're closing down. So we're able to, short the market, go to cash, take advantage. Well, the same guy then texts me in early February. Remember when Biden was saying the exact date that they thought Russia was going to invade, and people are all crazy and say, how could he know? Well, this contact of mine gave me the same date, which was the invasion date. Wow. All of a sudden, your head fills with all these concepts and repercussions. But clearly, the biggest repercussion was going to be that if they do this, then Europe is going to, essentially exit all of Russian energy, Russian uranium, Russian fertilizer, because it's all a function of natural gas and Russian oil. And if you started to build a thought tree about this, there's about 8 different sectors that were positively affected. And then as this thing drug on, it was clear that this was not, once they didn't get Kyiv, that this thing was going to go on for, I don't know, 6 months now? No. 9 months? No. 18, 24 months at best. And that the world had changed. In essence, the West pulling out of all the parts that Russia supplies and all the components and commodities that they supply to the West changes, it completely changes industries, completely changes the supply demand factors for outside Russia stuff. And gosh, it sort of starts with, how do they get uranium? How do they get wheat? Oh, by the way, they're the second largest wheat producer. How do they get the wheat out? Well, they do it with bulk shippers. How many bulk shippers are in that area? Well, not enough. And bulk shippers, went up 90% for us. Product tankers, same thing. All of a sudden, every product tanker for diesel or oil or for gasoline got rented. And then, of course, LNG. How are you going to get the natural gas? Well, they looked around and Norway said, sorry, we can't get you all the natural gas you need. And Germany sort of raised the red-white flag, and President Biden came out and said, listen, we're going to do everything we can. Well, gosh, how do you get gas to Europe? It's LNG. So then we were buying the entire LNG complex, and this thing just went straight up, Dan. I mean, as you know, on about June 20th, nat gas had gone from $2 MTU to in UK at $24, 12x. Natural gas in the United States, it went from $2 MTU to $4, $5. And all of this is because who the hell knew where people were going to get the gas? The only place that we really knew is that the United States and North America particularly is the only place where you have excess of natural gas, yada, yada, yada. So it all goes down the food chain. We were buying fertilizer stocks early because somebody else on our network happens to be a farmer, and actually an ag business. And it says, so you're looking at natural gas, but you guys got to be looking at fertilizer. Now, there's a lot of funny jokes wrapped in there, Dan, but let me tell you, we've made a shitload of money with fertilizer. It's been incredible. And then the dividends. So then the energy, natural gas royalty trusts that have 10, 15, 20 years of natural gas that have no expenses. They just get an overhead royalty on stuff coming out based on the price of oil and or gas. And we owned all these small cap, micro cap energy trusts that were yielding like 25% dividends because the price of gas had gone up 3x times. So that all sort of crescendoed into June. And I don't know about you, Dan, but here's my philosophy of life. If I, for some reason, have been fortunate enough to financially benefit to the degree, the average stock market gains about, call it 7.5% over a year for the last 50 years. It was like 10% since '89. It was 15% a year from 2000 to 2021. When you have stuff up 200% and 300%, I, as a money manager and just a normal human being, do not want to and should not want to give that back. So we closed out that stuff because there was I call it a Viagra chart. The natural gas just went straight up. And they were being priced as if natural gas was never going to come down. So it was, between the pandemic, April 2020, and buying all these energy companies for pennies on the dollar, and then getting a chance again to this, we're up like 370% since April of 2020. And we're sitting on those profits, and now we're starting to roll them back in. But these are crazy times. It's the biggest transformation in the modern history that we're living through right now when it comes to the macroeconomics. And I'll just say this. One of the differences between change wave and transformative research is I license an index, essentially a market timing index from the London School of Economics. They had a bunch of gurus who put together data back to 1969, and they got a really good model for showing when the risk of recession was very high. And so when our index drops below the number that we've established, which is 15, it's on a 1 to 30 deal, then we get cautious because I'm in the business of actually not only making money for people, but keeping the money we made for them. Right. And I'm an active manager. I'm not, if you're afraid of paying some taxes, I mean, a lot of stuff we have is endowment, a lot of stuff we have is tax-free Roth IRAs, super Roth IRAs, et cetera. But man, these are two life-changing events. The pandemic has changed everything in the world in many ways, and Brexit has done it. And maybe the third leg that we haven't really legged into yet is what I would call, now I'm into the N6 things. I would call essentially the decarbonization, the exit of carbon fuels, which in Europe particularly is a big deal. It's a big deal in the United States and other countries, but it's really big in Europe. So the decarbonization trade is nuclear power. Shockingly, Japan finally decided that maybe they need to reopen the 3 nuclear power plants they had closed and the 17 other ones that they have, and now they're all reopened. And the uranium, the biggest producer of uranium is Russia. Kazakhstan is number 2. When you look at the materials to make electric vehicles, the batteries, China has all that. So we created this new law in the United States, this phony baloney name of the Inflation Reduction Act. I just love it. I can't keep a straight face when I say it. And but it says that you got to have 45% of your materials in a battery that's got to be sourced from trade-friendly countries. So a lot of those are not cash flowing companies, but we're building what we now call a 2025 portfolio, which are EV metals, the lithium, the graphite, the copper, et cetera, et cetera. Copper, we don't we use a huge amount of copper to make EVs. It's just that.
Toby, I have to stop for a break.
Yeah.
And when I come back, I want to get into that particular part that you're talking about, which is the raw materials that are going into this new world that we have. So we're going to stop for a break. This is the Money Man Report. I love to have you with us. And this is a terrific treat for me. I love to talk to Tobin Smith myself. I get ideas from him all the time and have for many, many years. So what you should be doing is writing down these ideas. And Toby, when we come back, I want to ask you about specific ways that people can take advantage of these ideas. They're tremendously interesting just to talk about, but what can people do in order to actually take advantage of these changes as they're happening? So we'll be right back. I'm Dan Frishberg, he's Tobin Smith, and we will be with you right away. Just stick around for a minute. Welcome back. Thank you very much for sticking with us. I'm Dan Frishberg, and we are continuing with the Money Man Report and Tobin Smith. And Toby, you started with a lot of very intriguing stuff about the new world that happened. Explain again for people who are just joining us in a very brief way. What does Brexit mean, and what are the changes in the world? But what I really want to get into this time is exactly how do they take advantage of it? Give me some names right now.
Sure. Well, again, Brexit is just a acronym I came up with that said that the West is exiting Russia. Brexit, right? So a little play on words on Brexit.
Right.
But I mean, other than people in Texas who understand hydrocarbons and energy, most people don't understand that economies run on energy, hydrocarbon energy, and to the less degree, solar power, wind power, et cetera. There is no economy without energy. And when you take, for instance, a country like Germany, who produces 40% of some steel, 40% of aluminum, that go into cars because they produce 22% of automobiles, yada, yada, yada. If you're going to remove natural gas, then you're going to have to replace it. And to replace it requires a complete change in the macroeconomics that is the world economy. So that's about as big a change. And as you know, I followed transformative change very closely. And this is the biggest transformation the world has seen really since World War II, when you add on the fact that,
But they're trying to do that. But actually now in Europe, they're starting to burn oil again, and they're burning coal again.
Right.
And the price of coal got too high. That's why they switched to oil. And so now this is all what's happening as they incompetently try to bring in this new world that they don't really know how to do. And they're trying to bring it in when they're not ready for it yet.
Well, it's also, again, people don't quite realize that, like, for instance, United Kingdom. The United Kingdom, the average household in pounds sterling makes about the equivalent of $32,000 a year. If you have a flat in London, I was just talking with someone yesterday, her energy bill has gone from, let's call it $250 a month to $2,200. Now imagine in the United States, if you're not the average $62,000 a year household energy bill goes from $250 to $2,500. What do you think would happen to the U.S. economy? Well, the UK and the EU is living that nightmare right now. The UK is going to borrow $400 billion and pay essentially the gas bills, nat gas bills in the winter, so people don't riot. Germany's and France are somewhat doing the same thing. Anyway, the question is this just a blip, Dan, or is Brexit for as long as a foreseeable future? And as far as I'm concerned, particularly with the atrocities, particularly with the threat of tactical nuclear warheads, we're never going back to doing business with Russia. And the EU is not going back to do business with Russia. But they need a way to keep their economies going. And so that starts with LNG, liquid natural gas. Houston Ports, the biggest players out there. Cheniere was probably the first thing we bought. LNG is a ticker symbol. Do you realize that today, if you want to rent an LNG tanker, it's close to $150,000 a day, or $250,000 if you have one of these really big ones. So secondarily, we own a company called FLNG, and the ticker symbol FLNG is another company that's started by another Houston-based billionaire who recognized that they can take these FLNG, these FSRU platforms, they ship them over to places like what they've done, the 6 of them that they've shipped since the war. And these FSRUs, these floating repositories of frozen natural gas, they unfreeze it and they put it into the pipeline in Europe. And now all of a sudden, that's how we could go and fill up UK's nat gas tanks to 98% in the last 5 months. It would take 5 years to build an LNG plant, but you can float these FSRUs over. So that's another one that we own, FLNG, which is a big player there. Then, a stock that I'm sure you're familiar with that is going to be the next huge LNG plant is Tellurian, again out of Houston, TELL. Yeah. We only buy it when it blows up. And it just blew up again about 2 weeks ago when they were going to try to sell $4 billion of promissory notes. This wasn't even preferred stock, which blew me away. I mean, these are promissory notes. And they priced them at 13%. And the market said, try again. So the stock crashed from the stock ran, we first bought it like 2 days into the invasion, and it ran from like 350 to like $8. Well, again, Tobin's rule of investing. If you double something in 30 or 40 days, sell it or put sell stops underneath and let the market take you out. So we rebought Tellurian yesterday, today, simply because they're going to get their plant financed. They're going to have to bring in equity partners. They're not going to sell 13% notes, but there's no alternative. I love situations where there's no alternative. They have to build that. Somebody is going to foot the bill because the alternative would be that we're not going to be able to get enough LNG out to the rest of the world. Now, by the way, we also own China Petroleum, which is a big LNG player, because they're buying, Dan, natural gas from us. We've already shipped over to them in LNG, and they're turning their ships around and sending those ships to Europe and getting $22, a ton versus the $4 or $5 that you pay here. So while this goes on, we're just seeing more and more opportunities. I mean, I'm just going down our list here, and then the other one is just, who owns the natural gas in the United States? Well, we have this, stupidity that I would call it, that here we have in the shale in Pennsylvania and Ohio and West Virginia, more natural gas than the world could consume in 60, 70, 100 years, depending on, technology. But they can't build more than 2 pipelines. And they got shot down 3 times to build pipelines, once by the federal government. So in the meantime, Anadarko Resources, AR, EQT, which is Equitable, and a couple other natural gas players. The ones in the Marcellus is the upper part of the United States, but in the Haynesville shale, we got Comstock, which I just love, Comstock Resources, CRK. I'm looking at my list here, so I don't get too crazy here. But in Southwestern, SWN, which it gets all they're in the Haynesville in Louisiana. They're the shortest trip to the LNG plants. RRC Range Resources. Those are smaller cap. AR and EQT are the big guys. And then at the really big level, we've owned Oxy for a very long time, Occidental Petroleum. It's very nice that whenever the stock goes down, Mr. Warren Buffett steps in and buys more. So you sort of have the Warren Buffett put in Oxy. And so those are the names, pure play on nat gas that have not hedged all their profit away. And then the third big shift in the energy business is, as your listeners know in Texas, if they're in the oil business or they're in that gas business, is that in the old days, I remember going into the Fort Worth Del Frisco's years ago, and there's like 6 really big oil and gas guys, and they're freaking buying $400 steaks and rolling. They're just rolling big, man. That's what fracking was really going, and they borrowed a bunch of money to just frack as much as they possibly could. And no CFO or no economist said, hey, wait a minute. If you take this much natural gas out of the ground, and more than's being consumed, the price is going to go down. You understand this, right? Hell no, well, everybody's got religion now, as you know, Dan. So now you look at EOG Resources, for instance, or you look at, Pioneer. They've said this. Pioneer is going to take 60% of their cash flow and pay it as a dividend. And they said that before their cash flow went up 500%. And somewhat same thing with EOG. So we like the guys like that are essentially changed their business model. They have a capital budget that's paid out of their cash flow. They don't borrow against it. Then they pay down some of the stupid debt they took on, and Pioneers paid down $6 billion of debt, if you can believe it. And then the rest goes to the pay. So now you're getting a 14% yield out of Pioneer Resources. I mean,
I want to interrupt because I want to point out to the people that are listening and watching us that you notice that the cyclical changes, that the worrying about what the GDP is going to be next month and the unemployment report and the national income and all these things, which are what you see on television as the determinant, supposed to be what you're supposed to be watching and what you're supposed to be doing. Toby hasn't said one word about that. And you see, what we learned on TV was that the idea of television is not to make you money. The idea of television is to keep you watching between commercial breaks. And so it's not, in fact, sometimes some of the big time hosts, I'm not going to name them right now, told me off the air, stop thinking you're so important. If what you're doing is that important, where are all the billionaires? And the bottom line is that we are here to keep people listening between commercials. And so they're talking about the current news and the current cycle, which Tobin Smith doesn't even think about that. He does, he watches it, but he's thinking beyond that because the things that he's talking about transcend what's going to happen in the stock market next week, next month, or even by Thanksgiving. He's thinking about things that have to happen over the next few years because the world, because it's structural, the world can't proceed without these things. And so instead of worrying about, is this the right day to buy it because the stock market's going up next month and then it's going to crash, he's not even thinking about that. He's buying into things that the world has to have, and the path to the life we want is through those things. Toby, I'm just about out of time.
Sure.
So what I have to do is just give you a little time to let people know how can they subscribe and how can they get.
Well, I appreciate it. By the way, a lot of your listeners are subscribers, so I thank you. It's very simple. It's transformativeresearch.com, and there's a subscribe link. Our basic service is a mostly long only in these various sectors we've talked about.
Right.
$97 a year. I think it's a great value. We are moving that newsletter in the next couple of months to a much larger platform that I guarantee is going to charge more money for it. So that's my pitch. If you're more of a trader, Trader, I can never say that without sounding like traitor. But if you are a trader, we have a $500, $495 service that's on a Discord room that we're on all day long. And what we really do is we just sort of expand on what we're doing. I answer the question, anybody's question that people have, because there's a thing. We do a lot of options. We sell options when we think everything is rich, and we sell put options when everything I think is cheap. And then we'll use options like we've been using options this last week. As soon as I knew that OPEC was going to raise, going to take 1 million or 2 million barrels out, which they have to do. OPEC now is just like the Federal Reserve. The Federal Reserve, if they want to communicate something to the market, they call a certain reporter at the Wall Street Journal. And shockingly, the Wall Street Journal leaks exactly what the Fed is going to do. And similarly, OPEC, and more, they also do Bloomberg at the same time. But when Bloomberg and the Wall Street Journal both come out at the same time and say that their sources are telling it that there's going to be a 1 million to 2 million barrel reduction, there is going to be a 1 million to 2 million reduction. So we traded I love these leveraged options, Dan. I know you like them too, but the ones that go up 10% when oil goes up $1. So you can buy options on those. So for very little money, for $100,000 account, we use half of 1% as an allocation. So call it $500. I think those things are up 400, 500% in the last 2-3 days. So a lot of times people will say, geez, I just paid back my annual subscription in one option trade. And the answer is, in this world of volatility, when everything is so oversold that we're at a world record. I mean, I have never seen more gloominess, including me, for the overall economy. But when everybody is like gloomy Gus, and we have a world record of negative sentiment, it just takes a little thing to spark the match. And yesterday we got a little bit of that, and then today we got the JOLTS number that was lower than people expected. And I'll be damned if the thing didn't go crazy. So that's our larger service. And if you're active, then that makes sense. And then we're expanding our money management business, but right now we have all the slots available that are already sold out for our money management business. And right now we're 75% in cash because we made these stupid profits, and we're waiting, I would say being patient to put that money to work. Now, just quickly, let me say that our base case is that when we get through this quarter of earnings and we get the forecasts, and the market now prices down for what this recession light is going to be in the United States. But remember, 25% of the EPS for S&P comes out of Europe and the UK, and they are not having a recession light. They are having a recession like they've probably never seen before. We need to get through this time. We need the Fed rates to get higher than the inflation rates. That's the only way that you break inflation down. And these people dreaming of the pivot today, we had 700 points in the Dow because it looked like the JOLTS number was getting a little worse, which is actually which is better. So I'm not rushing to buy stuff. What I am rushing to buy though are when energy is flopped around, when it comes down to these bottom levels here, the support levels. That we bought one of my favorite, USOI, is a trust that spins out about 40%, correct, 40% dividends. And we buy it once a month because it's monthly, and we qualify for the dividend, and we hedge the downside if oil prices were going down. And we were making 8 to 10% a month doing that, Dan. That beats working. Now we're sort of hit the bottom, I think, the range of oil. So we're again going to be scalping these dividends and hedging. But there's some really, really neat things you can do. When, I know you're an option nerd like I am. When you can combine options with stuff you own, and above all, just to get your cost basis down. I'll leave you with one that we still love. USA Compressors, also out of Houston. They rent those big 10 or lease those big 10,000 horsepower compressors that if you don't have them, you don't get the natural gas into the pipeline or out of the pipeline. They pay a $2.05 dividend every year. When we originally bought it during the crash of April or March 2020, I think we bought it for $4.75. It still paid its dividend, never missed one. And now we have a zero cost basis in it. But then what we love to do is when it gets really up at about $20, where it went from 4 to 20, we like to sell the 20 call option and take in another $1 of premium. Yeah, it beats working, brother.
Yes, it does. All right. Well, I'm completely out of time, but I love doing this with you. I haven't done it in a little while, but
yeah, I appreciate it.
Thank you, Tobin Smith, and thank you, folks, for sticking with us. And we'll be back next time.
Ciao, ciao. Cheers.
Thank you. Bye.